Have you ever been at like a business dinner or maybe taking a client out somewhere and you start thinking, okay, this is good for business, sure, but
Yeah,
is any of this actually deductible?
right. Or even just in the office, wondering about the coffee in the break room.
Exactly. Why do the rules around expensing something seemingly so simple keep shifting? It feels like it should be straightforward, but, well, the IRS doesn't always make it easy, does it?
Not always, no.
Well, today on the deep dive, we're really getting into it, the sometimes confusing world of meals and entertainment deductions
Mm-hmm.
for businesses, for individuals.
Mm-hmm.
Our goal here is simple. Cut through that confusion, point out the maybe surprising differences, why things are the way they are, and just give you a clear map. What counts, how much, and what absolutely doesn't. And we're using some really solid material to guide us today.
Sounds good.
Now, before we really jump in, just a quick reminder, this deep dive is based on material from Farhat lectures. All the content, the examples, explanations, it's all derived from the great accounting resources over at farhatlectures.com.
Yeah, they've got comprehensive stuff.
Totally. So whether you're an accounting student, maybe studying for the CPA exam, or already a professional, definitely check out the website. They've got extra practice questions, video lectures, detailed support, really helps reinforce what we're talking about today. Big thanks to Professor Farhat for providing this material.
Absolutely. Great resource.
Okay, so let's unpack this. First things first. When we talk about deducting business meals, or maybe entertainment, the first question isn't how much, it's actually who.
Right. Exactly. That's the fundamental starting point. It's not one size fits all.
So it really depends on who is actually spending the money.
Precisely.
Yeah.
So take self-employed folks, consultants, freelancers, sole proprietors. For them, it tends to be a bit more direct.
Okay.
They report everything on their Schedule C. That's, the tax form for their business. And when these meal costs are deductible, they reduce their adjusted gross income, their AGI.
Ah, so it's a 4 AGI deduction.
Yeah.
Reduces their overall income.
Exactly. It lowers their taxable income right off the top, which is generally better.
Right. But what about employees? Say, someone working for a company who takes a client out.
Well, that's where things get very different. And honestly, a bit tougher these days. Traditionally, employees could claim these on Schedule A for itemized deductions. Below the line, as they say.
Okay, used to be possible.
Used to be. But here's the big change, and it's major. From 2018 all the way through 2025, those employee deductions for meals and entertainment, they're suspended completely.
Suspended, so just gone for now.
Pretty much, yeah. For most employees, that deduction just isn't available right now.
Wow, okay, that is a huge shift. So when we say deductible, it's not just about having the receipt. It's first about if you even can claim it based on who you are.
Spot on. Your employment status is critical here.
Okay, with that baseline set, let's zoom in on entertainment, because I definitely remember a time when, client golf games or taking someone to a concert felt pretty standard. What happened there?
Oh, yeah. It was very common practice. Entertainment covered a lot. Golf, fishing trips, baseball games, concerts, you name it.
Right. Building goodwill.
Exactly. The thinking was clear. It builds relationships, helps get new clients, keeps current ones happy. It was seen as like an investment in the business relationship.
Makes sense. So why the change?
Well, Congress started looking at it differently. They saw, okay, there's a business purpose, yes, but there's often a huge element of personal enjoyment, too.
So if you're at a game, you're probably enjoying it too.
Right. So to kind of clamp down on what they saw as potential abuse, or maybe just a tax break that blurred the lines too much between business and fun, they made a really decisive move. They restricted it heavily.
Restricted meaning?
Meaning, the key takeaway now, and everyone needs to be super clear on this, is that entertainment expenses are no longer deductible. Period.
Not even partially?
Nope, zero deduction. We're talking anything considered entertainment, amusement, recreation. Also, those membership dues, like for country clubs or social clubs used for business pleasure, gone.
So, no more writing off the golf club membership?
Not if it's primarily for entertainment or social purposes, no. And any facilities used with those activities, also not deductible. It's a pretty clean sweep.
Simply put, entertainment expense.
Out. That's a very clear line in the sand, isn't it?
It really is. No wiggle room there anymore.
Has that changed how businesses approach things? Are they just eating the cost now or finding other ways?
That's a great question. It definitely has shifted behavior. A lot of businesses are now focusing more on, say, a direct business discussion over a meal rather than a big entertainment event.
Makes sense.
Or they're prioritizing demonstrating value in other ways. Some, sure, they just absorb the cost as overhead, but it certainly makes you think twice about the ROI when there's zero tax benefit.
Yeah, absolutely. It pushes towards more purely business interactions.
Seems to be the goal, yeah. Left blending of personal enjoyment.
Okay, so if entertainment is basically off the table, what about meals? Because we still do business lunches, right? Business dinners. That seems fundamental. Absolutely. Meals are treated differently, thank goodness, right? But not without their own rules. You can still deduct certain food and beverage costs for your business, but the general rule now is up to 50%.
50%. Okay, so half.
Half,
Yeah.
generally. This applies to those classic business meals with a current client, a potential client where you're actually talking business. And it also covers meals for employees when they're traveling for work.
Like dinner in the hotel room on a business trip.
Exactly. That counts too, but again, usually only 50% deductible.
Now, wasn't there something about 100% recently for restaurants?
Yes. Good memory. There was a special temporary rule for 2021 and 2022. Meals provided by restaurants were 100% deductible then.
Okay.
That was specifically to help the restaurant industry bounce back during the pandemic, but that window, it's closed. We're firmly back to the 50% rule for most things now.
Got it. Back to 50%. Now, what about food inside the company, like
Yeah.
cafeterias or, donuts in the break room?
Right. That's another interesting area. These are often called subsidized eating facilities or de minimis fringe benefits. Think company cafeterias, like the example in our source material, Sanofi Pasteur, which runs one at cost.
Okay.
Or even simpler stuff like another example, Bucknell City and Company, a CPA firm offering coffee and maybe donuts. From 2018 through 2025, the company could only deduct 50% of the cost of providing those things.
So even the company providing coffee only gets a 50% deduction on that cost.
For that period, yes. 50% limitation for Sanofi's cafeteria costs, 50% for Bucknell's coffee and donut costs.
Huh. Okay.
But wait, there's more, and this is the real kicker coming up, starting in 2026, so pretty soon.
Uh-oh.
Those deductions. For the company cafeterias, the break room coffee and bagels, they're being eliminated completely. Zero deduction.
Wow. So no deduction for the company providing those things starting in 2026.
That's the plan. The source material points out this is part of the government's effort to, well, raise more money, tightening the belt on these kinds of perk deductions.
Man, so even the office coffee pot takes a hit eventually.
Yeah.
It really shows how, fluid these tax laws are. What's deductible, even partially today, might just vanish tomorrow.
Exactly. Staying informed is just crucial for any business, big or small.
Yeah, no kidding. Okay, but hang on. It can't all be 50% or zero, right?
Yeah.
Are there still situations where a business gets to deduct 100% of a meal? Is there like a 100% club?
Yes, there is a 100% club. And knowing when you qualify is really important. There are specific exceptions.
Okay, let's hear them.
All right, first big one. Meals included as compensation. If the value of a meal or even a whole trip with meals is treated as taxable pay to the employee or an independent contractor.
Meaning it shows up on their W-2 or 1099?
Exactly. If it's taxed as income to them, the business can deduct 100% of that cost. Think of the example, Mona, a top salesperson, wins an all-expenses-paid trip. If the company treats that trip value, including meals, as extra compensation to her, the company gets a 100% deduction.
Because it's basically like paying wages then.
Precisely. The IRS sees it as a wage expense at that point, not really a meal expense subject to the 50% limit.
Okay, that makes sense. What else is in the 100% club?
Okay, next. Meals tied directly to internal business meetings for employees. So if your team is having an all-day planning session or maybe a required training and you provide lunch,
Yeah.
those meals are a 100% deductible. The idea is it's a necessary cost for internal operations, not about entertaining clients.
Right, keeping the team productive during the meeting. Got it.
Then there's the popular one, employer-paid recreational or social activities for employees.
Like the company holiday party.
Exactly. Holiday parties, summer picnics, maybe that big bash some CPA firms throw after April 15th, like the example mentioned. These events primarily for employee morale and team building, 100% deductible for the employer.
Nice. Good to know those are safe.
Yeah, the IRS generally sees the value in those for employee well-being. And one more. If a business hosts retreats or off-site training events.
Okay, different from just a regular meeting.
Right. Think dedicated events at a specific location away from the usual office. The meals provided to participants at those events are also 100% deductible. Again, it's seen as integral to the business purpose of the retreat or training.
Okay, wow. So there are quite a few important exceptions to that 50% rule. Knowing the context is key.
Absolutely. It's not just what you spend, but why and how.
Right, so we know who could deduct, roughly how much, 50% or 100% or zero, and the exceptions. But let's drill down a bit more. What actually makes a meal a business meal that qualifies for any deduction in the first place? I mean, the IRS needs proof, right?
Oh, absolutely. They have very strict criteria. And documentation, as we'll see, is everything. First off, the cost has to be reasonable.
Reasonable, meaning,
Meaning not lavish or extravagant under the circumstances. It's a bit subjective, sure, but think common sense. A Michelin star 7-course meal might raise eyebrows unless you have a really good business reason.
okay, keep it reasonable.
Yeah.
What else?
Second, the taxpayer or an employee has to be present. You can't just, buy dinner for a client and send them off on their own and expect to deduct it. Someone from your business needs to be there.
Right. Makes sense. You have to be part of the discussion.
Third, the food and drink needs to be provided to a current or potential customer or client. It's about business development or maintaining that relationship. Doesn't have to be someone you've already signed. Potential clients count too. And importantly, business should be discussed before, during, or shortly after the meal.
Okay, client focus. Got it.
Fourth, and this trips people up sometimes,
Yeah.
if a meal is combined with a non-deductible entertainment, like you get food at the basketball game we talked about,
Yeah.
the cost of the meal and the beverages must be stated separately on the bill or receipt. You need that itemization. You can't just have one big charge for game day experience. You need to see food, $6, drinks, dollars, because only that part might be 50% deductible. The game ticket itself, still zero.
Separate checks or detailed invoices are key there.
Crucial. And finally, the big one, documentation. Meticulous records.
The receipts?
Yes, keep the receipts. But it's more than that. You need to document why you had the meal, the specific business purpose, who was there, what business did you discuss.
So notes on the back of the receipt maybe? Or a logbook?
Exactly, something contemporaneous. Because without that proof, even a perfectly legitimate business meal could get disallowed if the IRS audits you. That lack of documentation is often the downfall.
Wow. That documentation part really sounds like the make or break element. It's not enough to just spend the money correctly. You have to prove it.
You absolutely have to prove it. Record keeping isn't just good practice, it's essential for tax compliance here.
Okay, so let's try to wrap this up. We've covered a ton of ground today on this deep dive.
We have.
We learned employee deductions for meals, entertainment, mostly suspended until 2025. Entertainment expenses themselves, pretty much gone, no longer deductible.
Correct. Big change there.
Most other business meals, generally subject to that 50% rule, although we had that brief 100% window for restaurants. And even the company cafeteria or break room coffee, currently 50% deductible for the company, is going to zero deductibility in 2026.
That's the trajectory. Yeah, tightening up.
And then we dug into what makes a meal a business meal, needs to be reasonable, you or an employee must be present, client-focused, separately itemized if mixed with entertainment, and the big one, meticulously documented.
You nailed the key takeaways. And this whole discussion really shows how tax policy can nudge business behavior, can't it?
How so?
Well, by restricting entertainment so heavily and chipping away at things like company cafeterias, the government seems to be pushing businesses away from maybe the lavish social side of things.
Yeah.
And maybe more towards really focused, purely business interactions, even down to that bagel in the break room eventually being non-deductible. It does make you wonder, doesn't it? How much does the tax code actually shape the way we do business, not just financially, but culturally?
That's a fascinating final thought. Does it make us more efficient, or do we lose some of that human connection that sometimes happens over those less formal settings? Something to definitely think about.
Mm-hmm.
Well, we really hope this deep dive gave you some clear insights for navigating meals and entertainment deductions. Remember, for more details, practice questions, all that good stuff, check out farhatlectures.com. Their resources are fantastic for digging even deeper.
Definitely worth a visit.
Thanks so much for joining us at the Deep Dive. Until next time, keep learning and keep digging deeper.